I check two, there's a microphone check. Mic 1, 2, a microphone check 1, 2, 1, 2.
Good morning and a big welcome to the 5th edition of the annual open forum for the Cedar Provident Fund. It's brought to you by Access Pension Trust, your reliable partner in pensions. Before we begin, we'd like to take an opening prayer, and to help us will be our colleague, Mr. Ernest Atema, to lead us in an opening prayer. So please, Ernest, kindly join me as we take the opening prayer. Thank you. Oh, we can do it for him as he joins me.
Shall we pray? Our Father in heaven, we are most grateful for this day. We thank you for blessing us with the gift of life. We pray, committing our forum into your hands. We ask that you will lead us throughout this session. Grant us wisdom, direct us, and let everything end in success. We thank you in Jesus' mighty name. Amen.
Thank you very much, Ernest. Another round of applause for Ernest. Thank you. Once again, you're welcome to the 5th edition of the annual open forum for the Cedar Provident Fund. It's an event where we get the opportunity to report to you, present to you, and most importantly, take feedback from you as we run the Cedar Provident Fund on all of us, our behalf. Before we move on, we'd like to introduce some personalities we have in our midst. We have the Board of Trustees of the Cedar Provident Fund and the chairperson in the person of Mr. Robert Marshall Benin. Can we give it up to him? We have Mr. Efi Owai, who is a member of the board. Please, let's give it up to him as well. If you can kindly wave when I mention your name. Again, we have Madame Dr. Sokante. Please, let's give it up to and then Mr. Daniel Kwesi upon as well. We can give it up to him as well. And Mr. Matthew Mani is also a member. Please, let's give it up to him. And then Mr. Atobuatin is an independent trustee. And finally, but not the least, Mr. Samuel Enin is also an independent trustee. Let's give it up to them as well. And we also have the independent auditors of the scheme. That's John K. and Associate, represented by Mr. Gilbert Lomofio. Please, let's give it up to him as well. And then finally, the custodians for the scheme, that is Zenith Bank. We have their representatives here. Let's give it up to Zenith as well. Thank you so much for joining us. And very most importantly, we have you on the call. It's a joy to have you. To kickstart, we would like to invite the CEO of Access Pension Trust, Mr. Efi Owari, to give us an opening address. Then we can kickstart. Thank you. So let's give a big round of applause to Efi as he takes the podium.
Ladies and gentlemen, you are welcome to this morning's open forum for the Cedar Provident Fund. As you know, this forum has been instituted to enable trustees give account of their stewardship of the management of your pension schemes. And of course, to also allow you, our cherished clients, interact with our management team to help you clear your mind on any nagging issues you may have agitating your minds. What started as a nascent industry in 2012 has become the main building block of your retirement pot. The private pension industry today manages over 4 billion of assets, and that is approximately 3 times the net assets of SNET. This means your account with Access or your balance in the Cedar Provident Fund is increasingly becoming an important source of your future retirement income. To achieve a dignified retirement, it is important to preserve the purchasing power of your savings. Unfortunately, the events of our recent past have been rather unnerving. The assets of SNET has hovered around just about 2.3 billion in the last decade and has fallen from 2 billion in 2021 to 1.1 billion in 2022. And that is our conservative estimate. Similarly, the combined assets of tier 2 and tier 3 across the private pensions industry has declined from $4.6 billion in 2021 to $2.9 billion in 2022. And of course, in the last 18 months alone, inflation has eroded approximately 7% of the purchasing power of your retirement savings. This is unfortunately the systemic risk we've had to contend with. In anticipation of the recent economic slowdown, some proactive steps to avoid the worst outcome for our pension funds. We shifted about 37% of our assets into Government of Ghana Eurobonds to protect your savings against complete value erosion. And this was anchored on the belief that foreign investors will suffer the least in a possible debt restructuring. After all, Ghana will continue to need foreign investors to finance our budget deficit. And as you know, budget deficits have become a permanent feature of our budgeting. And so we thought it was prudent for us as a business to align our interests with foreign investors. You would know and probably agree with me that cash is a risky asset to hold in a hyperinflationary period. However, there was a need for us to build some cash cushion. And so as at the end of last year, we held 8% cash for tactical reasons. And for the Cedar Provident Fund in particular, it was needed in anticipation of withdrawals that were due or would be due in 2023. We maintained an average equity position of 6.5% for the Cedar Provident Fund. And I must say there is still room for improvement. And this is a marked departure from the average 1.5% equity allocation you will see for the average pension fund in Ghana. Equities will rebound when the economy recovers, and thus it is considered a hedge against long-term inflation, such as what we have experienced in Ghana in the past 18 months. In the past 3 years, we committed approximately 10% of our assets to alternative asset class and have so far invested about 2% of your portfolio in private equity. We believe investments in the real sector are not only vital for economic growth, but also long-term value creation for pension funds. Faced with limited investment options last year, we increased our holdings in the Absa Gold ETF to about 6% for tactical reasons. And our Chief Investment Officer will expand on the reasoning behind that decision. For our Cedar Provident Fund, a more radical approach was needed to fulfill our obligations to our members. We sold all 2023 maturing bonds well ahead of the announcement of the debt exchange program to build liquidity for 10th anniversary withdrawals. But that will still not be enough to cater for withdrawals we anticipated. And so we further gated the scheme to avoid unplanned withdrawals. Thanks to these proactive steps, we have not had any challenges at all in paying benefits due our members. I must say that we have some very difficult constraints implementing our investment strategy in Ghana. The MPRA's investment guideline places emphasis on listed securities. However, in many transitional economies such as Ghana, private markets are much bigger than public markets. For instance, credit to the private sector in Ghana as at July, made up of bank loans, was approximately 73 billion Ghana cedis, as against 616 million Ghana cedis of listed corporate bonds outstanding as of June 2023. And so if MPRA wants us to invest in corporate bonds, the universe we have is just 616 million, and consider the value of pension funds well in excess of 40 billion. The situation is not very different for equity. When juxtaposed against the free float shares, the Ghana Stock Exchange cannot absorb 5 billion pension fund investments. Practically, investment options aside government securities are very limited for effective diversification of your pension fund. To get some discussions underway, last year we applied to our regulator, the National Pensions Regulatory Authority, for an increase in external investment allocation to 20%. Though our request was denied, we believe the continuous advocacy of the Corporate Trustee Chamber can help to achieve some good outcomes in the medium term. And so, as your trustees, we are positioning ourselves well in advance to enable us to take advantage of external investments when MPRA changes the regulations. The DDEP has made headlines, and thanks to the instrumentality of organized labor and the advocacy of the Chamber of Corporate Trustees, pension funds were exempted from the initial DDEP. However, to enhance tradability and ensure pension funds are prioritized for coupon payments, the Ministry of Finance has initiated an enhanced debt exchange program for pension funds. And your trustees have evaluated the offer and decided to accept and exchange our old bonds for the new bonds under the enhanced terms, as the new deal offers a better return and cash flow certainty. That said, the bond maturity extension in the enhanced debt exchange program places pension funds. That said, the bond maturity extension in the enhanced debt exchange program for pension funds has implications for how liabilities will be managed. The bond market still remains shut for now, and maturities will not be paid until 2027 and 2028. So effectively, we have very limited resources for unplanned withdrawals. We will therefore prioritize for Cedar Provident Fund only 10th anniversary withdrawals and transfer out for persons who have exited employment with participating companies. And we will review this policy as the market situation improves. I think we can sign a sign of relief. The worst of the economic crisis may soon be over, but let's be clear. There remains the need to save more to recover what has been lost to inflation over the period. Persons approaching retirement have little time to rebuild their retirement savings. Hence, their Tier 3 may become an important source of additional retirement income. For those retiring after 5 years, the power of compound interest can still work its magic. But the need to save more to offset the effect of inflation is paramount. This can, for instance, be achieved through saving into the personal pension scheme on private basis or on individual basis. We therefore admonish employers, against the background I've given, to earmark benefits in the employer's portion of the Cedar Provident Fund for the payment of terminal benefits or as a source of supplementary retirement income for their workers. Also, measures should be taken to save up some windfalls and salary increases to boost employee retirement income adequacy. Without these, I dare say, many workers will fall into retirement poverty because of the effects of inflation on their savings. The trustees of the Cedar Provident Fund and executives of Access are here to account for their stewardship. As Opare introduced, Mr. Robert Benning is our board chair, Mr. Matthew Money, a trustee, Mrs. Dorcas Okante, a trustee, Mr. Daniel Sapon, a trustee, Mr. Samuel Atoboaten, a trustee, and Mr. Samuel Enin, a trustee, are here to attend to your urgent concerns. These are persons of competence, these are persons of skill and proven integrity who have accepted the duty and the responsibility to serve as your trustees. Also with us, Mrs. Louisa Sian, the board secretary and compliance manager of Access, Nana Riafe Boama, our chief investment officer, Mr. Parkofi Ankuma, our general manager, whom most of you are familiar with, and Mr. Collins Owusu Tamate, the fund administrator. Please, this is your event. You are the reason we have organized this program. And so feel free, ask questions, and let's make this meaningful. Thank you very much.
Thank you very much, Mr. Efie Owari. And as he rightly said, this is your event, so please share your questions, your comments, and your suggestions to us. Please note that the chat box is open, so please let the questions and the comments flow in there. We'll be taking a few more presentations, so we'll be taking a report from the members of the Board of Trustees. We'll also take a presentation from the Chief Investment Officer of Access Pension Trust, that's Nana Riafe. It will be on the strategies and the performance for last year, and then I'll look for the year going forward. And also, the independent auditor will also make a presentation to us, and then the general manager of Access Pension Trust will also have a presentation with us. And last but not the least, one of our partners, First National Bank, will also do a presentation to us. But to kickstart the presentations, I want to invite Mr. Robert Benning on behalf of the Board of Trustees to present the trustees report for 2022. As he comes, please let's give him a round of applause.
Good morning. I want to express my profound gratitude on behalf of the Board of Trustees of the Cedar Provident Fund for the opportunity given Access Pension Trust to manage your hard-earned money. We understand that for most of our clients, their Cedar Provident Fund constitutes their largest saving till date. We therefore do not take the opportunity granted to us to manage their resources lightly. We promise to remain faithful fiduciary in guiding and helping our members achieve their retirement goals. We also want to welcome you to the 4th annual Open Forum of the Cedar Provident Fund. My remarks are structured to touch on the global economy as well as the Ghanaian economy, the scheme's asset positioning and the return for 2022, which will dovetail into a brief education on investment risk and end with the general scheme operational update. The global economy in 2022 experienced significant challenges from the war in Ukraine and the growing geopolitical tensions between China and America. The resultant effect of the global uncertainty was felt by almost all nations, resulting in increased energy and food prices, mounting inflation rates, and increased interest rates. The Ghanaian economy was not spared and was heavily impacted by the Ukraine war that disrupted global food and resource supply chains. These, coupled with our local economic management weakness, plunged the Ghanaian economy into an unprecedented debt and fiscal crisis. Ghana's economic indicators spiraled out of control during the year under review. Inflation, which began the year at 13.9%, closed the year at 54.1%. Interest rates on the 91-day and 2-year Treasury maturities increased from 12.52% and 16.74% to 35.36% and 36.10% respectively. The cedi saw the steepest depreciation since 2014, closing the year down by almost 30% from the beginning year rate. To stem the tide of the fast failing economy, the government announced it was going to seek monetary support from the IMF. It is believed an earlier announcement to seek IMF help could have averted most of the pains the economy experienced in 2022 and still going through now. To bring the nation's debt to sustainable levels and also qualify for IMF financing, the finance minister announced a domestic debt exchange program to help reduce the country's debt to GDP from the current 102% to about 55% by 2028. Government bondholders have had to take significant interest rate discounts as well as extension in their bond maturities as well. In spite of the unsettling landscape, the Cedar Provident Fund experienced another strong year. Over the course of the year, we shifted our asset allocation away from local currency government of Ghana securities and significantly increased currency diversification within the portfolio by growing our Ghana Eurobond allocation and exposure to the ABSA New Gold ETF. The effect of the depreciating currency and gold's strong performance in 2022 resulted in an average return of 31.2% for the scheme constituent funds. This return represents 0.2% return above average inflation benchmark of 31.0% and 6% above inflation over the last 3 years. Total asset under management represented by the scheme's net asset value for the year end 2022 was 593 million Ghana cedis from 481 million for the year ended 2021. Each year, we use the opportunity of the open forum to extol the virtue of long-term thinking as it relates to investing for retirement. This year, we want to use the opportunity to highlight the often neglected subject of risk as it relates to investing. Risk refers to the degree of uncertainty and all the potential loss inherent in an investment. Every investment decision is subject to risk. The risk comes in multiple forms. I will highlight 4 common risks that directly affect the Cedar Provident Fund. The assets under our management are subject to credit risk when a potential issuer, for example, the government or corporates of securities, fail to honor their debt servicing obligation. Our investments in fixed interest securities also present another risk called interest rate risk. Interest rate risk occurs when changes in the direction of rates affect the market value of securities held by the scheme. Since interest rate is constantly changing, values of investment assets such as bonds, treasury bills, and real estate also change in relation to the changes in interest rates. Mark to market, which became the talk of town in 2022, relates to the value of fixed income securities falling when interest rates rise and vice versa. The asset management industry, through their regulator, took a bold step to force their members to reflect changes in interest rate, essentially marking to market on their portfolio daily. It is the international standard for valuing securities, and it is expected that the pension industry will follow suit in future. There is also currency risk, which relates to the value of an investment in a base currency, changing due to investment in assets in other currencies. Currently, the fund's assets have some substantial exposure to the US dollar, and therefore movement in the currency will have an impact on the daily value of the fund. To bring it home, anytime the Ghana cedi appreciates relative to the US dollar, clients' balance will reduce to reflect the changes in the currency. Lastly, the scheme exposure to stocks on the Ghana Stock Exchange exposes scheme members to equity risk. The risk of investing in equity includes share price falls, receiving no dividend, or receiving dividends lower in value than expected. The above risk expose our clients to daily movement in their account balance. In the short term, there will be periods where client balances will reduce when the above mentioned risk move against the schemes. There will also be many periods where clients' balances will go up. Overall, in the long term, we do expect that the up periods to outnumber the down periods and ultimately deliver growth to our most cherished clients. To summarize, every investor in today's market shall be subject to market risk. Investment is not a free ride. It is only a Ponzi scheme that can promise and guarantee a return equivalent to the 45-degree angle line on a continuous basis. Legitimate and genuine investment programs are characterized by bouts of ups and down movements. In investing, there will be periods of pain and many moments of glory. It is the disciplined investor with long-term perspective who will live to see the glory days. We believe the only way to build trust is by communicating frankly with our clients. We continue to engage our clients through multiple channels, including periodic engagements online and physically. Our daily show on Sunny 88.7 FM in Accra, our pre-retirement seminars, and this open forum are examples of ways of engaging with you, our cherished scheme members. The essence of these engagements is to give account of the stewardship of your money. We are proud to have also sent multiple client memos to update our members on the management of your investments in 2022, especially due to the fluid and fast deteriorating local economic conditions we experience. These memos, we believe, as fiduciaries, help us to keep you updated on key decisions, especially during fluid situations which may not permit a meeting within the short term. We will continue with the initiatives in 2023 and beyond to walk this journey with you and to keep you informed of major decisions we take on behalf of your fund. On behalf of the Board of Trustees, I thank all participating employers and scheme members for your continued trust in our stewardship of your financial resources. Have a great 2023, and let's keep investing. Thank you very much.
Thank you very much, Mr. Robert Benin. And I think it is fair to say he deserves another round of applause. Please, we can give it up. Thank you. Thank you very, very much. So we want to know the performance of the scheme in the previous year, the strategies going forward, and the outlook for all of that. So to do that for us, we'll invite the Chief Investment Officer of Access Pension Trust in the person of Nanaria Fibwama to take us through their presentation. Okay, please, let's do it better for him. Thank you.
All right, thank you. All right, so good afternoon to our dear scheme members. So the goal today is to present your pension scheme's performance for 2022 and present an outlook for 2023. But before we go into the main issue for discussion, it is important I throw a bit light on the macro and the microeconomic environment within which your scheme operates. For many of us, 2022 was indeed a year to forget. Almost all the macro indicators spiraled out of hand. After government delay in seeking help when it was obvious the economic sink was sinking, they finally did the right thing and announced an intention to seek IMF help in July 2022 to stem the tide of the economic bleeding. The IMF bailout, of course, came with difficult conditionalities in a bid to reduce our debt to GDP from as high as 100% to about 55% by 2028. To get this milestone achieved, government announced a domestic debt exchange program. Amidst all this, 2022 GDP print came in at 3.1%. And this was driven mainly by the slowdown in global growth global supply chain disruption as a result of the Ukraine-Russia war, high inflation globally and locally, amidst tightening financial conditions locally and internationally. In 2022, for instance, we saw the steepest rate hike in about a decade. And the monetary policy rate increase affected both business and consumer sentiment. We just spoke about softening consumer and business sentiment. This chart shows one of the longest decline in the composite index of economic activities, with a reduction beginning somewhere March 2021, all throughout the year 2022. In the face of the global supply chain disruption that arose out of the COVID-19 pandemic, the Russia-Ukraine war, and monetary and fiscal policy missteps in Ghana, we saw our inflation rate peaking at 54.1% in 2022. The cedi lost close to 30% of its value. And the monetary policy rate increased from somewhere around 18% to close the year a little bit above 27%. Over here, we show what happened in the external environment. You see from the bar chart, a worsening capital and financial accounts, which turned negative as the external capital market was shut on us amidst increased portfolio outflow from investors who hitherto used to participate in our local bond market. The FS outflow was partly a reason why we saw a steep depreciation of the cedi. The only positives over here was the increasing trade balance, which was driven mainly by increasing price of crude on the international market and also gold outperformance because of the economic uncertainty. The difficult economic environment led to a massive reduction in our gross and net reserve, closing the year 2022 at levels below Bank of Ghana's target 3 months import cover. Currently, we know our import cover is even less than a month. The difficulty we saw in the country led to an increase in the benchmark interest rate across all government maturities. 2022 saw the introductions of two yield curve, the old bond curve and the new DDEP, bond curve. The old bond curve, closed the year, close to 40%. The DDEP, curve averaged around 11% by close of year. We also saw our Eurobond yield increasing beyond normal range, closing across the various maturities at levels above 27%. And this was really, on the back of a raft of rating downgrades by the 3 top rating agencies. Now, in managing your money, we took into account the difficult macroeconomic background to position your asset for growth. The Cedar Provident Fund key objective is to outperform inflation over the long term. We want to grow the real value of your money. And therefore, when we are investing, we have that at the back of our mind to invest in assets that would generate growth above inflation. Obviously, last year was a difficult period to beat inflation that peaked at around 54% and averaged 30% throughout the year. Despite all this through deliberate tactical asset changes. The scheme was able to generate return in excess of 30%, right, across all the various retirement plan. But before we dwell on the scheme's return, you'd realize that we took heavy positions in equities, right? Increasing our equity position from 33 million in 2021 to about 60 million in 2022. Somewhere around May, we sold, close to 30% of our local government of Ghana bonds holding and went deep into the DHS Euro bond, positioning the scheme to benefit from the depreciation we anticipated beginning of the year. We also reduced significantly our positions in fixed income, i.e. fixed deposit with banks and mutual funds, to increase our positions in the gold ETF, mentioned in his opening remark. The combination of these changes in asset allocation led to the Cedar Provident Fund printing a return of 31.2% for the year 2022. And the 31.2% compares very, very favorably to the average pension schemes return on the market in 2022. The average we've seen was around 16%, whilst our scheme, pulled a return of 31%. If you look at our key, benchmarks of inflation, we outperformed inflation by 0.2% in a very difficult year. Again, we know, for most of our savers, they are either saving to buy a house or to buy items indexed to the dollar. So we always have the USD at the back of our mind when we are investing. And last year's return also exceeded the depreciation we saw vis-a-vis, the USD by 1%. We want to focus our client attention to the long term, right? If you look at the CAGR return over the last 5 years, and even since the inception of the Cedar Provident Fund, you'd realize that on the average, we've outperformed inflation by 7% and also outperformed the depreciation of the cedi. On a cumulative return, basis, 100 cedis invested in our scheme since inception would be about 671%. That's kind of put into perspective, the work of the trustees together with the fund managers and our other service providers have been doing to ensure we grow your money in order that you have a dignified retirement. Now, how does the future, look, for scheme members who are invested in the Cedar Provident Fund? Of course, 2023 still remains a very, very difficult, year for markets. We've seen demand destruction due to the new taxes that has been introduced as part of the IMF conditionality, and also to increase government revenue vis-a-vis our expenditure. We've also seen the tightening in financial condition leading to the destruction or a slowdown in credit creation. And once banks are not expanding credit, it impacts the general economy. We've seen physical constraint due to the need and obsession to meet the IMF conditionality to get the full 3 billion coming through over the next, 3 years. All this points to a very, difficult 2023 and probably beyond. Now, how do we position your scheme to benefit from the macro, headwinds, right? How do we pick assets to ensure that despite all of the difficulties around the economy, we are able to invest your money to beat inflation? Firstly, in terms of our strategy. We are quite, bullish about the Ghana Stock Exchange, and we plan to increase our allocation to companies listed on the stock exchange. For our equity strategy, we are very, very much obsessed in investing in companies that have strong balance sheets, companies that have great governance, companies that generate good cash flow, and most importantly, companies that have records of paying consistent dividends. We will slow down on our first deposit investment, i.e. bank fixed deposit investment, because we see, more, opportunities in other asset classes, such as treasury bills. Yes, DDEP has happened. A lot of us, are shying away from government assets. But like a free, mentioned, we don't have a very well-developed capital market, and government still dominates the economy. We see our treasury bill investment as a treasury management strategy, especially for the Cedar Provident Fund, where withdrawals, can be a bit irregular. And currently, the treasury bills is paying good return, albeit below inflation rates. Now, in the near term, we hope to expose close to 15% of our assets to our alternatives. And alternatives, as defined by the MPRA, includes private credit, private equity, infrastructure, project finance. We are on the hunt looking for opportunities within this asset class. And if these opportunities meet the scheme's criteria, and those criteria are defined as the project should have very good governance around it, it should generate, cash flow in the near term, the managers of the project or the fund, should have integrity. When we see those opportunities, we'll back those opportunities. This is how we plan to position your assets for growth, given the constraints we see in the government sector. Now, having said all this, again, DDEP, is still the talk of town. Government embarked on restructuring our domestic debt in order that our debt to GDP could come down to a sustainable level. They made an offer to all bondholders somewhere, last year, after back and forth, after agitation, from Labour. Government came to us, just recently, and enhanced, the offer they are making to pension funds. Now, the Board of Trustees of our schemes have accepted to tender our old bond for the new bond. And the reason is simple. The economics of the new bond that has been offered pension funds, per our analysis, is better than our current holding. And why is that so? Firstly, government is saying, for every $100, 100 cedis of bond we hold, right? You are going to exchange it for a bond at a premium of 15%. So if we held $100 bond, the new bond value will be 115. If you see from the table, the current government of Ghana bond holdings, in addition to our Dachi and ESLA bond holdings, comes to 297 million Ghana cedi. Now, if we tender in this 297 million Ghana cedi for the new bond, we are going to get a bond whose value would be 342 million Ghana cedi. So that is where, the first source of value is coming from. The average interest rate on our bonds, i.e. old bond, is about 19%. For the new bond, government is offering us the value and the coupon that is going to be paid and the cash flow from this coupon is also greater than the existing bond. So on the basis, of this, economists, we feel it is prudent, to tender in the old bond for the new bond. Besides, really, the old bond, hardly trades. So if we get, employers coming in, to withdraw on behalf, of the employees, with our positions in the old bond, it will be difficult, to sell if the outflow is more than the new monies, coming in. But then once we tender in our old bond for the new bond, it is assumed that together with the banks and the asset management firms that already have tendered in their old bond for the new bond, we could create a market, for the new bond, to trade. And therefore, if there's a need for liquidity, we can sell. We've heard, arguments of potential concentration risk because the two new bonds that is being offered matures in 2027 and 28. And over there to our argument is the same issuer, right? The old bond is already in default. So why do we have to overly concentrate on the potential, default, somewhere in the future and reject, this, offer that makes our scheme members, better off. So on this basis, we will tender in our bonds for the new bonds before the deadline, tomorrow. And the Board of Trustees, thought it, very important, to let you know. But like I said, everything, all the decision is in the best interest of our members. We feel the new bond offers, better value, and therefore that informed our decision to tender in our old bonds for the new bond. Thank you, very much, for your audience.
Thank you very much, Nanaria Feboama, for that informative presentation. Next, we will take a presentation from the independent auditors of the scheme. So they're going to present to us on the audited accounts of the Cedar Provident Fund for the year 2022. And to do that is Mr. Gilbert Lomofio. Please let's give it up to him as he joins me.
Thank you very much. Good afternoon to you, trustees. Good afternoon, scheme members. So I'm here to present to you the independent auditor's report on the financial statement of the Cedar Provident Fund for the year ended 31st December 2022. And I will begin with the opinion. We have audited the accompanying financial statement of Cedar Provident Fund, which comprise statement of net asset available for benefit at 31st December 2022, statement of changes in net asset available for benefit, statement of cash flow for the year, a note to the financial statement, which include a summary of significant accounting policies and other explanatory notes. In our opinion, the financial statement give a true and fair view of the financial position of the scheme at 31st December 2022 and its financial performance and cash flow for the year ended in accordance with International Financial Reporting Standard and in the manner required by the National Pensions Act 2008, Act 766, Act amended, and the Occupational and Personal Pension General Regulation 2011, LI 1990. The basis for opinion. We conducted our audit in accordance with international standards on auditing. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit of the financial statement section of our report. We are independent of the fund in accordance with the International Code of Ethics for Professional Accountants, including International Independent Standards, issued by the International Ethics Standards Board for Accountants, and we have fulfilled our other ethical responsibilities in accordance with the code. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Now, Mr. Chairman, trustees, and members, with your permission, I'd like to skip the responsibilities of the trustees for the financial statement and those of the auditors for the audit of the financial statement and read to you our key audit matters. In accordance with international standards on auditing, this part of our report is intended to describe the matters communicated with those charged with governance that we have determined in our professional judgment were most significant in the audit of the financial statement. The matter we have identified in this financial statement is income recognition. The scheme generates income largely from the investment of assets of the scheme made up of members' contribution, as well as undistributed portion of assets of the scheme brought forward from the previous accounting period. Some of these investments straddle the end of the accounting year under review, and hence key consideration for the appropriate recognition of income of the scheme is the cutoff date. The income of the scheme for the year should be recognized only if they accrue or are derived during the year up to and including the year-end date, being 31st December 2022. Income that accrues beyond this date should be recognized in the following accounting year. To ensure that in recognizing income, the cutoff date have been taken into consideration, the audit team performed the following procedure. We reviewed the design and implementation of the scheme's income recognition procedure to determine the adequacy of control over the scheme's investment valuation procedure and income recognition at the year-end, of course. We obtained evidence of the existence and accuracy of interest income thereon, of a sample of significant investment, those maturing after the year-end date, by reviewing the particulars and recomputing the expected year-end interest income on them. And finally, we evaluated the adequacy of the accounting policies and disclosures on income recognized in the scheme statement of changes in net assets available for benefit. Report on other legal and regulatory requirements. We have obtained all information and explanation which, to the best of our knowledge and belief, were necessary for the purpose of our audit. In our opinion, proper books of account have been kept, and the trustees of the scheme have fully complied with the prohibited investment practices stated under Section 35 of the Occupational and Personal Pension General Regulations, LI 1990, and all other requirements under the National Pensions Act 2008, Act 766, and so far as appears from our examination of the books of the scheme. The engagement partner on the audit resulting in this independent auditor's report is Gilbert Ajetelo Mofio, whose practice number is ICAG/P/1417, and I signed for and on behalf of John K. and Co., which practice number is ICAG/F/2023/128 on 28th of April 2023. Thank you very much for your attention.
Thank you very much, Robert. So we'll be taking a presentation shortly from representatives from First National Bank. But before that, Zanaya, there is a quick question for you, if you can kindly address that for us. So first of all, the person is appreciating the scheme, by extension the managers, for doing it best during such a difficult year. But his question is that the scheme is heavily tilted towards fixed income, with inflation and currency depreciation. Which inflation and currency depreciation can wipe away all returns, as we saw last year at any point. So what is the team doing to reduce this risk?
Thank you very much. I think, if he mentioned his opening remark, that somewhere last year we sought approval from the MPRA to increase how much we can do externally from the current 5% to 20%, but the request was denied. Within the constraints of the investment guideline we have, your fear and your concern is legit. It's very, very, very difficult in this environment, to outperform inflation, right? At least, this year, the currency, slide is just, that, do I say just? We've seen the currency falling by 20% from January, till now. There's still, 4 months to go. We are hoping the CD, probably, strengthen. But within the constraints of the MPRA guideline, it's so difficult outperforming the current high inflation we see around. What we plan doing, going forward, is to take advantage again of what we have available to us within the guideline to at least diversify, your asset more broadly. Currently, we can do, 5% of our asset, outside. We are exploring, that possibility aggressively. Currently, there are some few fund managers in Ghana who offer mutual funds, whose asset allocation is broadly, foreign stocks. We have seeded, those fund managers with some small cash. When they do right by us, we believe we can increase the allocation, going, forward. We are in discussion with few alternative asset managers, to, seed, their schemes with some CDs, and hopefully, those investments, could help put our schemes at a position above inflation. Having said that, navigating, the alternative, market, it's tough, right? When you put your money behind a private equity manager, you don't get your money back until, say, after 7 years, which means, our scheme members who sometimes use the Provident Fund as piggy bank and withdraw every 2 years should have a rethink. And then, join us, together in building, something, solid that can, provide you, again, the kind of retirement, you desire. So thank you, very much.
Thank you very much, Nanayafe. Please, we encourage you to keep submitting your questions to us in the chat box, and we'll answer them both on the chat box and then also during the presentation. At this point, we'd like to invite First National Bank to give us a short presentation. Please, let's give it up to him as he comes.
Good afternoon, and all protocol observed. So we are from First National Bank, and we find it very appropriate to be here this afternoon to share with you a product we've jointly developed with Access Pension, which is a pension-backed home loans. Now, what this pension-backed home loans seeks to do, and as we've all heard from our various presenters, we need to look for alternative ways of growing our scheme or growing our investments, sorry. But before we get into the pension back, I think it's important that we get clients to know, or contributors to know, what we offer. So we have what we call the home purchase loan. That gives you the opportunity to own a home. For this particular product, what it seeks to do is you contribute 20% of any property you are seeking to purchase, and then the bank will fund 80%. We have an option where you can, we'll give you 100% of the property price that you can own. In that case, what we seek to do is we have what we call the collateral indemnity that you need to take. And once you have that, then we are able to do 100% loan for you. We also have what we call the home construction. It's very common to see a lot of people trying to develop their own houses because people believe that they want to own, they want to self-build, and it's very common when we go around. So we have a product that addresses both, we call it construction and completion. Construction, where we can give you enough money to start when you have land to just develop your house, or completion where you may have started, but you need money to complete. Then we have the land purchase. Obviously, the process of home ownership starts with land. So you can get a loan from us to be able to buy land. Now, if you are in some other form of business, or you have a property that you've already acquired and you think that maybe you need money for education, or you need money to expand in any business, we are able to release equity on any existing property you have, or you want to improve the property you have. We also offer that as well. And I think the last thing we also do is more for people who want to either switch or refinance because of one reason or the other, or challenges that they have with their current banks. Then we have the Save to Own. The Save to Own was a product that we actually developed because we realized that there was a lot of people within the SME space, and it was difficult for them to demonstrate how much income they make on a regular basis. So what this product seeks to do is we ask you to save for a year, that's for 12 months. Within that 12 months, you are able to demonstrate, once you're able to demonstrate a certain repayment, we are able to use that to form a basis of giving you a loan to be able to purchase a property. Now, what can you use this our pension-backed loan to do? You can use it to buy land. You can use it to purchase a home. You can use it to build your own, or if you want to renovate. So this particular product, what seeks to do is for basically now we have approval for tier 3. So if you're a tier 3 contributor, you have access, you can access any of our funding to be able to do this. And what we do is that we leverage on your contribution to be able to give you that loan. Now, obviously, you may have contributed up to a certain amount based on what you have with your pension trust. Now, we will do an assessment based on how much you've contributed. We'll also look at your income, and then we'll be able to give you a loan. Without the contribution, what we would have done is just to give you a loan based on the income you earn. But together with your pension contribution, we should be able to offer you more money to be able to buy the property you're looking for. And at the same time, it also makes it more affordable for you to be able to acquire the property. So there are a number of options that we have so far as the scheme is concerned, but I will try and maybe speak briefly to, but if you want any further engagement, we can go into the specific details. So our first option is where you have contributed, and what we seek to do is that we don't want you to take out your money with the pension scheme. We want you to still keep the money. So you still have your money with the scheme. We'll look at what you've contributed, and on the basis of that, we will do a loan for you to be able to buy the property you are looking for. Then we have the second option. That is when, just in case you think that for one reason or the other, you want to be able to cash out parts of your contribution. But what this scheme seeks to do is that because we know it's your pension and we don't want you to lose your pension, the idea is that, look, keep your money, and then whilst you know your money is with the pension fund, we know how to be able to give you money to be able to either build or buy the property. So what the second option seeks to do is it will also look at, you may cash out parts. And like I said, the idea is not to cash out all, because we don't encourage people to do that, because we want you to still be able to grow your pensions and at the same time own a home. Then the last option, which what that seeks to do is, based on your contribution, we are able to offer you 100% loan. I mentioned earlier that we have the collateral replacement indemnity, but in addition to that, you can also decide that, look, based on your contribution and what we see you have contributed, we'll be able to give you 100% of what you want to buy. So I want to encourage most of our contributors that, especially in these times where we are looking for investment options, we try and explore the option of the real estate so that you see it as an investment that you know that it will grow. And it's also a good idea to always get on the property ladder, because we always believe that once you acquire your first property, then you are beginning to move away from poverty. I think I'm done. I don't know if there are any questions or comments to speak to.
Okay, so we have one quick question. Somebody wants to know about interest rate in relation to this.
Yeah, thank you. So for the, okay, one thing I missed, I was to say that the pension back home loans is a CD mortgage. So everything is in CD. Currently, we offer our rates based on the GRR plus a margin. And usually we have our margins between 1% to 6%, depending on our assessments in terms of your how much you've contributed and your risk profile.
Thank you very much, sir, from the First National Bank. Let's do it for him as he takes his seat. Thank you. So we'll invite the General Manager of Access Pension Trust to give us a presentation. And then after that, we'll move on to questions, answering your questions. So back of it.
Thank you very much, Mr. Noy. And thank you very much, Team FNB. I'm sure our participants are very excited by this product. We at Access are equally excited. This product development took years in the making. We had to go back and forth with the team from FNB to develop something that we believe will be best fit for our clients. It's just unfortunate interest rates have rallied in recent times, but this is definitely a product that we encourage all our clients, especially those who have amassed enough balance under their Cedar Provident Fund to access. You are going to get some very good rates, good discounts on your loans. Now, let me talk about the other initiatives and innovations that we at Access have put in place for you, our scheme members. As administrators and as corporate trustees, we believe we have failed at our job if the last person or the last member of an institution does not know what is happening on his pensions accounts. To this end, we have invested quite heavily in ensuring that even if you don't want your pensions account close to you, we'll bring it close to you. If you are not interested in coming close to it, we are making sure that your account is close to you. So we have a range of digital channels beyond our branches in our various cities. So we have branches in Accra. Our head office is in East Legon. I'm sure a number of you know there. We have a branch in Kumasi around the Doom. We have another branch in Takoradi around the Takotel terminal, close to the Takoradi Technical University area. And then in Tamale. So beyond these branches, I'm sure some of us live very far from these branches. You want to, at the convenience or the comfort of your home, have access, check your statements, know what exactly is happening on your accounts. We've granted you access to a myriad of our digital channels. First of all, let me introduce you to the Access Client Access Portal. This is our web portal. It has been designed to give you a very easy platform as an employee and also as an employer. So for those employer representatives on our call, they have usernames and passwords that they can log on to the portal. For those of us who are employees who do not need to see other people's statements and other people's reports, we have our direct access as members of the scheme. Now, to visit this portal or to access your scheme information, you type cap.accesspension.com/CRM, or you go to our website, accesspension.com/Ghana, and log on through, just click on the login, member login on our portal, and then you can have access to it. Now, once you click on the portal and you click on member login, it will request that you enter a one-time PIN. So if you enter the portal, it will request for your member number. That is your account number with Access. Just like any financial service, you have an account number. You can't go to open a bank account in with FNB and tell them that you want to use your SNIT number. Of course, your SNIT number is there, but they will provide you an account number. And that is the same thing that Access provides you. That's your member number. It's your unique identification under the Cedar Provident Fund. But we've also made room to accommodate people who have SNIT numbers or who know their SNIT numbers to also use that to access the portal. Once you enter those details into the system, it will request for a phone number. That phone number should be the same phone number we have in our records. And once you provide that phone number, a one-time PIN will be sent to your inbox for you to access your account. Please make sure, if you've not updated your phone number in our records, to immediately do that. You can do that through your employer or call our call center. At the end of it, I'll show you the number for you to update your phone records in our system. And once you enter it, you have, voila, have access to your account. Beyond the things you have access to, you have access to your member statements. You want to know, okay, so for the past year that I've been contributing, what has been happening on my account? The portal gives you access to know exactly what is happening on your account. You have access to other scheme reports. The auditor just presented the 2022 annual report or the audited financials. This will be available on the portal, so you have access to that. There's something we also publish on a quarterly basis. So on a yearly basis, we have the annual reports, which includes the audited report, the investment reports, etc. But on quarterly basis also, we also try to provide you insights on what is happening on the scheme. So we provide you what we call the fund fact sheet. It's just a page, sometimes a page and a half of all operations, whatever is happening in the economy, whatever is happening on your scheme, how your scheme has performed. So you have a fair idea, just to keep you in the loop of how we are trying to provide you value as a member of the Cedar Provident Fund. And this is also available on the portal. If you have any questions on any of those things, we have a live chat on the portal where you can type and chat with any of our call center representatives to address or answer any concerns that you may have. Finally, for employers who are on our portal or who have access to our portal, we require them to upload contributions on a monthly basis. It's a more secured way. In the past, we used to receive emails of people's schedules and co. It was dangerous. But once that we have put all that onto the portal, members and employers actually have access to upload their schedules on the portal. And also, we are in the process of launching what we call the paperless withdrawal system. So for those of you on this call, very soon, you'll be able to apply for a withdrawal paperless. Just go on the portal, enter your details. Your employer will receive an email to authorize it, and immediately it comes to Access, and within 5 working days, we should pay out your benefits. So this is something that we are in the process of doing. It's already available there for some other schemes, but for the Cedar Provident Fund, we are in the process of rolling it out. We have replicated this service because not everybody has access to, say, a computer to sit behind and type and have all this access to the web portal and all that. We've provided it for you on the comfort of your phone through what we call the Access mobile app. Now, the Access mobile app is available on iOS and Google Play Store. We recently upgraded the mobile app to feature some biometric login details. So now when you log into the mobile app, you can use your Face ID and other details to log on without necessarily having to receive monthly pins, etc. It's modeled similar to what we have under the online portal, but it is very convenient. It is hassle-free. You can do everything you can do on the portal on there, including make contributions voluntary contributions into the personal pension scheme, etc. And lastly, if you say you don't have a laptop or you don't have a desktop and you still don't have a smartphone, but you still want to access your information, indeed, we have the Access USSD code, *1860#. 18 stands for the year you become an adult. Of course, an official adult is 18 years. And then 60 is when you go on retirement. So once you know that this is adulthood, 1860, you have a fair idea that this is access. So *1860# on MTN and Vodafone, you can have access to all the services. You can even start a personal pension account on the USSD or even the mobile app. You can update your beneficiaries. A lot of times people fail to update their information, and then God forbid something happens to you in the course of your life, and your beneficiaries come in to access your benefits and they are unable to access it. They need to go get a letter of admission, a very long process, sometimes very complicated. So we encourage you to update your beneficiaries, update other information, and you can even refer a friend who requires a personal pension scheme. Now, let me also introduce you. Access is in the process of doing a lot of free goodie things for you because we cherish you as a client. So as part of our innovations, I think last year we mentioned the life insurance cover. This is a free life insurance cover for every scheme member on the Cedar Provident Fund. This life insurance cover is underwritten by Hollard Life Insurance. Once you're a member of the scheme, the Cedar Cedar Provident Fund scheme, and you should die or you should be past medically incapacitated, the scheme would pay you an additional benefit beyond what you would be getting under the Provident Fund. You'll be getting an additional benefit of 5,000 cedis, which will be paid to your beneficiaries or yourself if you're alive. But you need to be an active member. You don't need to have depleted your account, left the scheme for a long time, and then you come back and say, oh, or your beneficiaries come back and say, oh, my uncle passed 6 years ago, so I want his money and the life insurance cover. No, you need to be an active member, at least at the last time or at the point that you passed or you became medically incapacitated, and then you should be able to access the free life cover. Finally, I want to introduce you to the Access Payroll Service. This is a complimentary service to all employers on the Cedar Provident Fund. This service is to help you as an employer keep very accurate payroll records of your staff. Once you are an employer on the Cedar Provident Fund, you don't need to buy any payroll system. Access has a payroll system that supports you to do your payroll, run your payroll on a monthly basis. Now, this payroll system is web-based. You don't need to buy anything. You just have internet. Once you have internet, you should have access to the payroll system. The idea is to support employers with all their payroll needs. You can customize who has access to what. Maybe you have 3 levels or 5 levels of grading. Management, directors, all this thing can be taken care of, and different people may have access to this. Now, some of your employers that are on our scheme already have challenges uploading contributions onto our portal, even though we say without no voucher, no contribution, NVNC. People end up paying contributions without getting the voucher because of the challenges they have uploading the contributions. With this payroll system, it's fully integrated with the CRM. So once you run the payroll, you are able to immediately get the format or the template to upload onto the CRM immediately. So it's integrated and it runs for you to create the voucher for you to make the payment. So it's pretty much seamless. It works directly with our CRM portal. And lastly, it's flexible to accommodate different payroll scenarios. Now, let me introduce you to something that has been on our minds for quite a while now. If I should ask that, they just wrote BEC, right? And a number of employers and even contributors here may have children that may be going to enter secondary school within the next month. If you ask them if they have any form of savings to cater for their the school fees or admission fees of their children, We all say, oh no, my bank account, oh, my Provident Fund, I have to drop my Provident Fund. You need to have an objective for your Provident Fund. Is it to pay school fees? You need to have ambitions, and this is something that we are very passionate about. If you continue drawing on your retirement savings now, what it is that you are going to be poor at retirement. Now look at this. According to SNET, as of 2019, 10.5% of Ghanaians who were 60 years and above had or received pensions. How many people in Ghana were even more than 60 years or were 60 years and above? You think about it. And out of that number, only 10% had access to pensions under the SNET scheme. That is a very troubling statistic. Out of that, 25% of those people who had access to pension schemes were earning between 300 to 400 Ghana cedis per month, woefully inadequate. If we should move forward, 50% were earning 600 cedis or less. 1,000 cedis were 75% were earning 78%. Sorry, was earning 1,000 cedis or less, and we had just 1% earning 5,000 cedis or more per month. Now, somebody will say, "Okay, this is 2019. What was the most recent statistic? Is 2022. According to SNET, 95.5%, almost every worker under the SNET payroll currently or pension payroll, and 2,500 Ghana cedis or less." Now look at yourself. You are used to earning a particular salary. 2,500 Ghana cedis is woefully inadequate for you. By global standard, we are expected to take home about 70 to 80% of what we were earning before retirement. I don't want to ask the question. I don't want to put anyone on the spot. But think about it. 70 to 80% of your pre-retirement income should be enough to take care of you when you go on retirement. If you look at our system in Ghana with a tier 1 and tier 2, you may be lucky to get about 60%. You will be lucky to get about 60% of your current salary to take home for retirement. So it really falls on you to have an additional backup plan. Your Provident Fund may be that backup plan for you, but you've already started spending it or chopping it. I know a lot of you, because of the on the market, people are in a hurry to come and say, "Well, I want to withdraw from my Provident Fund, uncertainty, so I want to withdraw." No. Nana my colleague has explained why you do not need to withdraw. And let me buttress that point. Your tier 1 and tier 2 is not going to be enough for you. Your tier 3 is the game changer for you. So as much as possible, stay invested. But even if anything, do a bit more than you're already doing through the Access Pension Plan. The Access Pension Plan is a private or personal pension scheme that allows you, an individual, to save to augment what you're going to get under your occupational pension scheme. It is wrong. It's a sin, actually, for you as an employee to only have, in terms of retirement savings, what your employer is doing for you. You yourself, you sitting down as an employee, how much do you have in your pot for yourself beyond what your employer is doing for you? And that is a key question. You can answer that through the Access Pension Plan. Who should sign up? Anybody who has a pension scheme, a tier 1 scheme, a tier 2 scheme, or a tier 3 Provident Fund can't sign up to the personal pension scheme to augment. How can you contribute? You can use our digital channels. Once you come on board, we require you to have a direct debit form. We complete a direct debit form on a monthly basis. Debits are done from your bank account, and then it's credited to your pensions account. Beyond that, you can use our digital platforms to also do additional voluntary contributions. Sometimes you might have a windfall. December is just around the corner. I'm sure people have started planning for their bonuses. Maybe you get a bonus. You can also contribute a portion of that bonus towards your retirement or towards a goal. As I said, if your child is not going to secondary school in September, maybe your child is probably 9 years now. So he has 5 years or she has 5 years to go on retirement. You could use the Access Pension Plan to start saving towards that for you. For your child. When can you withdraw? There are terms and conditions applying to, of course, withdraw. But basically, there are sub-accounts. I don't want to bore us now. So just give us a call on 0302-738-555 or 0800-00-1860. Let's have a talk. We'll give you a bit more details on the Access Pension Plan. But it is a game changer, and I think I would encourage you to take advantage of it. You can call us, as I mentioned, on 0800 000 0800 00 1860. Also, let me encourage you, if you are not already following us on social media, to follow Access Pension Trust on Facebook, Instagram, and Twitter. Now it's called X. I think it's called X now, yeah. So please follow us there so that you get a bit more update on our innovations, our services that we continue to churn out. Thank you very much.
Thank you very much, Pa Kofi Ankoma, the General Manager for Access Pension Trust. We're getting closer to the end, but we'll take a few questions. Most of them are being answered on the chat box. So would invite Mr. Edward Nyako from FNB to come and answer this one for us. The person wants to know how much he can get as a loan and what are the bases for granting the loan. Whilst he comes, please, if you can, okay, Pa Kofi, if you can get ready to answer this for us. Somebody is asking that due to the inflationary pressures, he thinks that it is not advisable to withdraw even on the 10th anniversary. But beyond the 10th anniversary, will there be tax if he chooses to withdraw? So after Edward, please come answer that for us. Thank you.
Okay, thank you very much. So how much can you get? Okay, so how much you will get is based on how much you earn. So once you tell us how much you earn, we should be able to. The difficulty sometimes is that people tell you a certain figure, but what we do is we go behind whatever you tell us to be sure that you don't have other loans. But obviously, what we seek to do at any particular point in time is your repayment shouldn't be more than 40% of your net salary should go towards your monthly repayment. So what you loan you get is based on how much you earn, but we'll always make sure that you don't exceed 40% monthly repayment. Now, in determining, in giving you a loan, there are two things we look at. I've mentioned about the income. The income will tell us how much loan we are going to give you. The second part is to do with the property you are buying. We always want to be sure that there's right title to the property. And because, you know, as a mortgage, what we have is your property. So we would undertake the usual due diligence to be sure that you have good title to the property. Even if the property, like I mentioned, if you are purchasing, obviously it's not in your name. It should be in the vendor's name. But once we are certain that it is in the vendor's name, we will go ahead and then register the property in your name. So by the time you finish paying the loan, you have the property in your name. But in instances where you are using it as an equity release, then the property needs to be in your name. If you are doing construction and the property is still not in your name, but you have purchased it from the land from a vendor that we can cross-check to be sure that the person has good title to the land, then we are able to. So those are the two key things. Your income, you know, our incomes vary. So depending on how much you earn, we'll be able to tell you how much. And like I did mention, we also leveraging on your pensions to be able to give you a bit more than you would have earned. So all those, your contribution so far will also help us determine how much money we can give.
Thank you very much, Edward. Pa Kofi, so as you prepare to answer this, there's another one, and I think it's in response to FA's address. So the person would like to know what other avenues that are prioritized. I feel you mentioned that given what is happening, 10th anniversary withdrawals and others. So if we can go over.
Okay, thank you very much. I think I see two questions. So let me take the first one. Somebody's asking, due to inflationary pressures on our pension, Is it advisable not to withdraw on the 10th anniversary? Will tax be applied from 11th anniversary for? I can happily tell you that once you cross the 10th anniversary, there are no taxes applicable to any withdrawal after the 10th anniversary. So you are safe on that. You do not need to withdraw if you do not have need for the money. Or what happens is that when you withdraw the money and you make a cash, as Tanari mentioned, the worst thing to hold during inflationary times, like your hyperinflationary times like this, is cash. So you do not want to hold that cash and not keep it in an asset or a revenue generating, income generating assets for you. So that's the other thing. So stay invested as long as you do not need the money. If it's your 10th anniversary and you don't need any money, stay invested as much as possible. The objective of the scheme is to ensure that over a 5-year period, we outperform inflation by about 5%. So that is the objective of the fund. As much as possible, we can't have a glitch like we did last year by just close to performing just like the inflationary pressure, was it inflation rate. Now somebody's asking, this is serious. Pensioners within this regime, within this 5 years, cannot access their Cedar fund. What other workaround assistance? So the reason, of course, I think the reason, let me just give a reason again. The reason why you may not be able to access your fund, as we explained, is that there is a liquidity tightening on the market currently. So we have found a solution to assist, especially those who prioritize certain withdrawals ahead of some other withdrawals. And these include those who are 10 years. So if you are not 10 years and you apply, we may have to refuse to pay you out. It is your money, but we may not pay you out as a result. Now, what there are the other options? Most of the time, people withdraw from their Provident Fund to complete a project. Basically, I want to finish my house, I want to roof. I'm happy to say FNB just finished presenting. They provide you that opportunity to still have your Provident Fund account available for you, whilst having access to some form of cash to complete the project that you so want to complete. So you don't need to deplete your pension account. You can take a loan from from FNB with your Provident Fund balance to complete the project that you so wish. I would further encourage you that you start a personal pension scheme also for yourself, so that you do not fall solely on your Provident Fund. A lot of us have fallen into that pitfall where our Provident Fund is our life and everything. As much as possible, I know the salaries are not that great, but if you can, a little drop in the ocean is quite significant. Put something down. It's not really about how much you earn. It's about how much you save. Even if you're able to save 100 cedis on a monthly basis, within 5 years, that's almost 4,800 with an interest rate of about 18%. You've not thought about it that way. If you should double it up to about 10 years, that's about 9,000 cedis, 9,600. Think about it that way. Start investing towards your retirement. Something small. Don't force yourself. Don't do something that you may not be able to do. Where that way, the least thing that happens, I want to take my money. Start putting something down now, and for your own for your own good, you would get something at retirement. Thank you.
Thank you very much, Kofi. And just to reiterate, thank you. For members that are going on retirement as well, your withdrawals are also prioritized, just like the 10th anniversary withdrawal. All too soon, we've come to the end. We'll take just about a question and then we'll bring it to an end. So somebody wants to know, if your first withdrawal is before 10 years anniversary and your next is after your 10th anniversary, will there be a tax on your withdrawal? So just to reiterate, after 10 years, every withdrawal comes without tax. After 10 years, every withdrawal comes without tax. So as we conclude, we'd like to encourage you to continue using our digital portals, including the Access web portal, the Access mobile app, and then also the star 1860, which is our USSD code, star 1860. And also you can reach us through the toll-free number 0800 00 1860. We also like to remind you that 2:30 we'll be having the same open forum for our access pension plan. So members on the call that are part of that scheme should also register and join us at 2:30 for that all-important session. We would like to bring the session to a close and want to say a very big thank you for spending this time with us and sharing your afternoon with us. God willing, next year we'll come your way again with another edition of the Annual Open Forum. We'll continue to interact with you through employers and in all the various portals and platforms that we do. Would like to take a closing prayer as we bring the curtain down. And to do that, I'd like to kindly invite our brother Colin Stamati from the Scheme Accounts team to share the opening prayer with us. Please, let's give it up for Collins as you come. Thank you. Thank you. Thank you, Collins.
We are praying. Father in heaven, we are grateful for this day. We began with you and you have taken us through successfully. Your grace and your mercy sustain this discussion. All we have heard is for the betterment and the growth of our schemes. We are grateful for all you've done for us. In Jesus' name we pray. Amen.
Thank you very much, Collins. On that note, thank you. On that note, we bring the 2023 edition of the Annual Open Forum for the Cedar Provident Fund to an end. Thank you very much. See you next year and see you in our engagements during the year. Thank you very much.